Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, welcome back to the show.
Jim, pleasure to be back on the show.
John, did your bowl make or break target number one at its Lemoine project in Quebec?
Jim, unfortunately, Lemoine's target one finally proved to be a bust. Last week, about a day after we did our last show, Discovery Watch show, they put out a press release saying that over the weekend they had intersected the target right where it was supposed to be, and it turned out to be only 0.6 meters of pyrrhotite, no real mentionable copper or salarite or anything else present. Pyrrhotite is an iron sulfide. It is extremely conductive, and they concluded that, yes, this entire nice 350 meter by 150 meter target appears to be caused by iron sulfide. So that is a big disappointment. The stock has sold off to about 4.5 cents, where punters who had hoped to get the free lunch on the upside for the discovery play of another Lemoine style discovery, they were probably in at 4.5, 5 cents, and they have been able to bail out at 4.5 cents. The company is settling back to being this asset-rich company waiting for some sort of a takeover deal or a buyout offer, early buyout offer of their land project, which is the gold play in which IAM Gold can eventually acquire 100% by issuing to a maximum of 15 or paying a maximum of $15 million and granting an NSR. And that project doesn't seem to be moving along at any great speed, though IAM Gold does have a problem at its Doyon mill, which is being fed by the Westwood mine, where they had an earthquake, or at least an underground accident, earthquake of some sort that damaged it, and it's probably not going to be able to keep feeding that mill forever. So the hope is that IAM Gold moves more aggressively on the Rouen project and makes a special offer outside the current terms of the deal to acquire that project, cashing IAM Gold up to pursue its other projects. In the press release, they did say that analysis of now what they know that target 1 to be helps them see that target 2, which is a feebler conductor and has some salarite in the vicinity, could actually be a real target with the target metals that we want, such as copper and zinc and hopefully gold enrichment in it. But at this point, the market's not particularly excited about them drilling another deep hole to target a supposedly overlooked conductor from the past drilling. More interesting is stepping farther to the west along the property, where they have encountered an alteration system, sort of 400 meter by 6 kilometer area, where they have not yet found in any massive sulfide mineralization. But again, that will require some additional targeting work. At the moment, the market's pretty much shifting its attention to the Besheffer project, which they've held for a long time. They have this former partner from which they earned an interest that still has some 20% residual interest in part of the claim package, and they're trying to force their right to acquire this for stock, but they've had difficulty doing so because it was a formerly public company that ended up getting delisted and is now run by who knows whom. The Besheffer projects in western Quebec, in the sort of general area of the Detour Lake Deformation Zone area, also where the Matagami deposits are. And what's interesting about it is that it's on strike with an existing VMS deposit that SOQUEM has delineated. There's the structure projects onto the Besheffer project, but they haven't found anything resembling VMS mineralization. But to the northeast, Exelon had a project that it also called Besheffer, where they did find gold mineralization in the past. They optioned it several years ago to Wallbridge. Somehow Wallbridge in late 2019 managed to not make the claim assessment filing, so the claims came open and some prospectors staked it, and Wallbridge had to do a deal with the prospectors to buy back the claims for some amount of money and agree to spend some money on some unrelated claims. And they then did a deal with Exelon and issued a bunch of stock to basically close out the deal and have them vest for 100% rather than deal with the problem that they had allowed this property to lapse. So last year there was no movement on that Besheffer project, but this zone, gold zone, supposedly projects onto the Besheffer project. They did do some IP work in early 2020, which suggests that they do have a target in the area, in that area. And the market would probably like it if Yorbo went in there, raised some more money, and did some work to see if this high-grade gold system does indeed project onto the property. But this is not likely to happen until they can use the courts to force the acquisition of 100% of this project, so that if indeed they do have something, they don't have a future litigation problem on their hands, because there's a 20% loose piece out there that they haven't consolidated under 100% ownership. So Lemoine, Target 1, is a bust. It was exciting while it was going on. They had to drill several wedges to try and get to the target, but at the end, it was just a pyrrhotite lens, and those are quite common. If you're drilling in a sort of grassroots area and you have such targets, you start off with the expectation that it's going to be something worthless like that, and if it isn't, then you get excited. In this case, this was all within the sort of range of the Lemoine deposit, 758,000 tons of gold-enriched copper, zinc mineralization, the second richest in North America after SK Creek. But it did turn out to not to be the case, that this target, this conductor, was caused by another Lemoine seafloor exhalative body.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, where is Forum Energy Metals with its winter drill programs in northern Saskatchewan?
Where and when are these programs going to start has been the song of January, as a very warm winter kept Canada from getting properly frozen over in these areas where you need to build ice roads, winter roads, where you need the ice thick enough to drill on it, where you need the swamp sufficiently frozen so that you can move your drill on it and drill your targets. But the warm spell has ended. The cold front came down into Canada a few weeks ago, and both of Forum Energy's projects are now on track. The first one is the Fur Island project. That's a uranium prospect on the northern rim of the Athabasca Basin in close vicinity to the Black Lake fault structure. And they optioned this to Orano, which can earn up to 70% by spending $6 or $7 million over several years. And they started a program in March of last year and got one fence of 6 holes done when the COVID pandemic exploded and they were chased out, had to shut down. Forum Energy itself had last drilled that project in 2015 when they had, done about 10 holes, and they had encountered smoke, uranium smoke at the unconformity. And with these types of high-grade uranium deposits in the Athabasca Basin, the deposits form in the vicinity of the fault structures where graphite beds have evolved, and the graphite serves as a type of sponge to cause the uranium to drop out of these hydrothermal flows of fluid that are loaded with uranium. And so the trick is to try and find where are these very high-grade cigars located in these fault structures and splays associated with the main fault. And this is fairly shallow here at Fur Island, so they think it could be open pittable. This 6,000-meter program with 2 rigs will run until late March. And this has the potential to deliver a significant discovery. I think the stock's strength since December is linked to a growing enthusiasm for uranium, not because uranium prices have gone anywhere. They're still like $29.10 for spot uranium, which is not very good at all, even for these high-grade Athabasca basin-style deposits, but because the market says that if you really want to have your temperature gain by 2050 to be 1.5 degrees Celsius or less, and you want all your car fleet and that to be electrified, you definitely are going to need to have nuclear energy as part of the mix. And there's a range of new, smaller scale reactors too that could be built in more locations rather than a few central locations that are being tested that could come on stream. So there's been enthusiasm for uranium explorers and developers, not because the uranium price has gone up, but because they see a long-term trend towards a uranium boom making a comeback as the industry embraces nuclear energy as part of the package that's going to charge up all these future electric cars. And the other big project of Forum Energy is the Janus Lake project, which is under option to Rio Tinto, which can earn up to 80% by spending $30 million or so. They optioned this in 2018. They got permission a little bit late in January of last year to build a winter haul road into the Janus Lake camp because they wanted to build a major camp. They got the road built in time, and they were just starting to truck in equipment that when the COVID crisis hit, and they had to shut this down because, of course, the First Nations communities up there are particularly vulnerable, and they were using First Nations community members to drive the trucks, to move the stuff. So during the summer, they flew in a lot of equipment, but the main stuff, which was the heavy stuff like diesel fuel, they wanted to have the road, use the road this year. And again, it was delayed, but the road is built. They are moving equipment in. They have a significant 7,000-meter drill program starting, 2 rigs. One will be at the Raffles Lake target, which emerged from this summer's field work. And this is the one that we should be paying attention to as part of our Discovery Watch program. The other target is the Jansen Lake target, on which they've done most of the drilling in the past couple of years. They will have 1 rig on there doing infill drilling because they want to have enough data to put together at least a starter resource estimate to keep the bigwigs and headquarters happy that some progress is being made. But this is a giant district scale play, a 52-kilometer long property. The analog is the Udokan deposit in Russia. That's 2.8 billion tons of 1% copper and 12 gram silver. Its problem is it's a sediment-hosted system that's still flat like it originally formed, except that a mountain of barren rock is parked on top of it, making open pit mining cost prohibitive. So they have to figure out some way of underground mining this. This is a similar aged system in northern Saskatchewan, except that it's tilted on its side. So what you have is these sort of 20 to 60 meter edges of these flat-lying systems now sticking up out of the ground. And the focus in the past has been in the Janus Lake area itself and in the immediate vicinity. And the grade is only about half of what it is at the Udokan project, but that may just be a function of the fact that past exploration focused on that, which happened to be sticking out of the ground, and that might not have been as rich as is possible. So in this new area, Raffles Lake, it's associated with a linear mag anomaly, which seems to be a key marker for these beds of copper, silver, sediment-hosted mineralization. They've got geochem from the summer work program. This drill program could make the big discovery distance that says, wow, Rio Tinto was right in optioning this project. This is a district-scale play. It has world-class potential, and we're off and running. But I don't think the market's really bidding the stock up because of that. It wants to see that sort of increase in the grade of the system before it gets excited about what that 20% interest of Forum Energy might be worth. The other thing that the company has got going is the Love Lake project, and that's a magmatic nickel platinum group play that they have developed. Last year they got some key targeting work done. They'll have a geophysical survey going in to tighten those targets. It'll be a summer drill program. They don't have to do that in winter, such as they have to do with Fur Island, part of which is under Black Lake. And they raised $1.5 million at 10 cents in December, and that should give them enough money at least to get going. But if Orano gets lucky on Fur Island and finds the high-grade zone, then the company will be able to raise additional money to properly fund its 100% owned project. Mm-hmm. I don't think that Rio Tinto will give up if Refuse Lake doesn't yield anything particularly interesting, because it still have the rest of that 52-kilometer property to explore, and it is doing work in the Jansen Lake area to at least have a resource there to point to and say, hey, this is the style of deposit that we know is here. We're going to find more of it, and we're going to carry on. So this Foreign Energy is doing well on two fronts right now in winter, and the third front will be active in the summer for our Discovery Watch audience.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with John Kaiser. John, did Niobay get the green light to resume drilling at its James Bay Niobium project?
Niobay did indeed get a protection agreement from the Moose Cree First Nation about a week ago, which outlines the protocols for communicating about what they are doing. They had earlier in January gotten a drill approval from the Ontario Ministry of Northern Development for an 11,000 up to 20,000 meters of up to 30 holes in that area. The winter drill program they are planning is only 11,000 meters, and it will have two purposes. One will be to basically infill drilling to upgrade the resource from inferred to indicated. They have now launched into a pre-feasibility study, which they hope to have done sometime in mid-2022. The other part of the program will be to investigate what showed up in the drilling from the past year of a high-grade zone in the middle, which, if it is present as they think it is, will provide the basis for them pushing to increase the throughput rate and of the open pit scenario. Last October, they published a PEA, Preliminary Economic Assessment, and it was a bit of a shocker because it included 3 mining scenarios. One was underground, which we assumed would be what the Moose Cree First Nation would permit in their backyard. The second was a hybrid combination of open pit mining and underground mining. But the third was an open pit mine only running for 30 years compared to the 23 years of the combined underground open pit and the underground only scenario. And the bigger open pit scenario had an NPV, net present value, at an 8% discount rate of $1 billion Canadian, which if you convert that into a future stock price, and now the stock price based on 84 million shares fully diluted, that's about an $11 future price target. And the market did not really respond to the PEA in a positive manner. It was more excited before it came out. I guess it didn't like how good the numbers actually were. It was a bit of disbelief. But the company was able to raise $12 million through a private placement at 65 cents for the unit and 68 cents for the flow-through. It was spread amongst 100 placees, so it had broad-based interest. It wasn't just a few institutions gobbling it all up. But oddly, even after it closed, the stock was quite weak. It was trading below the 65-cent price. So you would have thought that it to do better, and it was a bit of a head-scratcher why the stock was weak. And around the same time, Osisko Gold Royalties exercised its option to purchase a 1% NSR in the James Bay deposit for $2 million. It was granted this option about 3 or 4 years ago, and it stepped up to be the major investor to help them, get this thing rolling during the years when they were fighting the opposition within the Moose Cree Tribal Council to having any mining exploration activity in their backyard. That was when the chief was a person who was philosophically opposed to mining. Her preferred role was to have people engage in traditional activities such as trapping fur-bearing animals and that sort of stuff. And she was bounced out in 2019. 2019 was a sort of an important. Actually, it was 2018 that she was finally bounced out. 2019, yes. In 2020, they finally got a drill program going and got this whole thing turned around. A different group of people are now watching this to making sure that the Moose Cree First Nation have a big say in everything that's going on. And the reason the open pit turned out to be an acceptable option included was that they looked at this and said, we're not very excited about future jobs doing underground mining. But hey, an open pit mine, we can imagine ourselves as being the owner-operators of your mining fleet, hauling this stuff out of the pit and to your milling and processing facility. That appeals to us, and plus it's going to last 30 years, so it isn't just a 20-year flash in the pan where we have to work underground to get some revenues. So that was the big breakthrough in the First Nations, taking a proactive business view and saying, here's work that we can make money and what we actually like to do, plus the fact that you have a niobium facility there with other R&D going, and you have your younger people going off to university on scholarships to study more on this material science. This is becoming more important even right now because there's 5 reasons the market has been sort of reluctant to push the price up into the sort of $2 to $4 range where it should be based on the PEA. One is that there has been skepticism that the First Nations would support this project and allow it ever to proceed. And it's been a struggle. It's taken the company 4 or 5 years to bring the First Nations on side. But that problem seems to be pretty much solved at this stage. Another problem has been general ignorance about niobium. What is niobium? How do you think about it? How do you quantify it? And then another obstacle has been from people who actually understood that 80-85% of world's niobium comes from an absolutely monstrous mine in Brazil called Araxá, which is 250 million tons of 2.5% niobium compared to sort of 0.6, 0.5, 0.6% niobium at the James Bay deposit. And the final skepticism is that, CBMM will never really allow competitors to emerge. It can always increase production and push the price down to a level where other mines are not profitable. But we've already seen that they organized the price in the past 30 years as part of their strategy to have mainstream adoption of niobium as a strengthening alloy for steel that helps lightweight it. And there's another primary niobium mine in Brazil that's about 1%. And then, of course, there's the Niobay mine in Quebec, which is now operated by Magris, which had a grade of used to be 0.7%. It's lower now. It's an underground mine. It does not really have any expansion potential. But the interesting thing is that along the way, CBM signaled that it might want to stay at 80 to 85% of global supply. And niobium is part of the macro economy, and that means that as the global economy grows, you consume more steel. As you consume more steel, you consume more niobium. So you can see the demand growth for niobium, and CBMM has signaled that in terms of primary supply, it would like to stay at 80-85%. Obviously, it gets the lion's share of increased supply as the demand goes up, but it wants a stable, gradually increasing price that tracks inflation, that keeps the end users happy. But there's a new thing that came onto the scene, and that is that in the electric vehicle arena, the lithium-ion battery, the anodes are generally made of graphite, which is not particularly good, but there is R&D going on in new battery technologies that involve titanium and niobium, and CBMM has gone out on a limb to promote this. In fact, it has even published projections that if this battery that Toshiba is working on were to be adopted and commercialized and achieve widespread adoption as part of the world's electric vehicle fleet, that would increase global demand for niobium by 2030 by about 35-38%, which is substantial. Now, obviously, they can accommodate any such increase by just increasing production at Arasha, but if they want to stick to this 80-85% range, they do need other primary mines to come on stream. And yes, some niobium byproduct supply will come when some of these other rare earth deposits come on stream, but it will not be reliable. And one thing for sure, you are not going to see the price of niobium skyrocketing like cobalt, because that is not at all in CBMM's interest. They want to make sure that the substitution and thrifting effect does not kick in. So right now they have a sort of price of $40 per kilo. It'll grind up gradually over time, but they don't want to see it spiking to $100 a kilo, do a kind of vanadium type of thing. They want stable price stability. And so the thing that's helping drive the stock higher heading into the new year that sort of overcame this post-financing funk is the market's realization that niobium isn't just a boring macroeconomic metal. It's also a potential player in the sexy clean energy, green energy, whatever green metal type of space, and that having another deposit like James Bay come on stream, I mean, it is right now in the best location with the best grade and sort of cost discovery information, flow sheet discovery information out there to come on stream as the fourth mine. There will be more needed, but this one is now looking like CBMM itself would support it coming into production because the Niobay mine cannot really increase its production. They're pretty deep right now, and they would need to have a completely different hoisting system to expand throughput. And that's why checking out this higher grade portion of this deposit is kind of important, because they see the demand growth for niobium bigger than what they initially expected a few years ago when they were doing this, and they would like to increase the throughput of the open pit scenario with the high grade in it and make this thing even more valuable. So if we get good news on the high grade front, that's the sort of little discovery bump we might get for our discovery watchers. But the main thing is to watch for a greater market appreciation of how important niobium may become for the whole clean energy agenda for the electric vehicle fleet. And of course, in terms of lightweighting steel, that's an obvious part of it. But the potential participation in the battery technology wars as a major player, that's what will capture the imagination of the market. And it's not necessary for this to happen. It's just a conceptual thing that will make people feel better about owning a niobium junior such as Niobay Metals.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.